Hi everybody, I'm Chris McNellis, Darren Rickwood. We're here talking about the difference between a bridge loan and a home equity line of credit, or HELOC.
Yes.
Darren, what's the difference between a bridge loan and a HELOC?
So both are a second mortgage on a currently existing property you own. Bridge loan, our bridge loan anyway, we do in-house. It's our money, quick, simple, easy. It is only on a primary residence.
Okay. And you have to have equity.
You have to have equity, and it's all how much you can borrow is based on how much equity you have in the house. Typically, you're capped at 80%.
Okay.
Home equity lines, even though you can get more money out of the house, is a second mortgage done by a completely different bank. We don't do home equity lines.
Right.
I send everybody to like Tower Federal.
Okay.
So you're dealing with another bank who has a workload and a pipeline, 60, 90 days to get one done.
Wow.
Now you can put them on second homes sometimes.
Yeah.
But it is an existing loan that either is paid off or stays in place. If you put one on your primary residence, really you're saying, okay, this is my primary residence.
So a bridge loan is a quicker way. You borrow against the equity in your primary home. Okay, my primary home is worth $600,000 today.
Mm-hmm.
And I have $300,000 as that I currently have to pay off. So I have $300,000 remaining. In the perfect world, what could I borrow?
Yep. So you can borrow $180,000. That takes you to an 80% loan to value.
Of the 300
Of the
equity.
300 plus the 180 takes you to 480. Okay. So what that does is gives you $180,000 to put down on the purchase of your new home.
Okay, and so I've identified a property.
Yep.
Do I have to go to settlement on my current primary house to buy the next primary home where I'm moving to?
No. So the bridge actually is in place and we settle 3 days prior to the new settlement. As long as you qualify,
Yeah.
you're fine. The bridge gives you money from that house. You still own it.
Mm-hmm.
You take that money and buy the new one.
Okay.
Here's the good thing, and what you tell a lot of people and what you like is they can now move out of that house. You can get it cleaned,
Yeah.
staged, looking super nice, so
Yeah.
then you can get, and the sellers can get more money for their house.
That's right. That's right.
And they don't have to worry about moving in a weekend. That's, no more coming to the settlement table with the moving truck sitting outside and all
Well,
the kids screaming.
And I
yelling.
guess what I've seen that's interesting lately is people are doing these bridge loans with you, and they're coming into the contract, like completely ready. They're proving that they can do the deal without question. And that's solid. It's almost like, financing isn't as stringent as
Right.
it could be when they prove that they already have this bridge loan in place. So it's like a cash offer.
And there's no confusion on our end. They come in, the same person that's processing and underwriting the purchase of your new home is going to process and underwrite your bridge loan. So they're familiar with your file. It's quick,
Yeah.
it's easy. We close it 3 days prior. The money's sitting and waiting at the title company. You go to the title company, you're already familiar with them. You go in and sign for the purchase of your new home.
So a bridge loan is in-house, it's faster. You don't have to do 2 different applications necessarily.
Right.
Because your company already has everything. And it's a quick turn and burn just to get the other house, but look like a cash buyer because you're borrowing against the equity on your first primary.
Right.
So that's a beautiful thing. And a home equity line of credit is a different bank than you would do your 30-year mortgage with. And so you have a separate loan application.
Longer process.
Longer process because everybody seems to be wanting to do them.
Right.
But those are the people who aren't working with a lender that have a bridge loan product that's strong.
Right.
That's just, all of us who realize if we have home equity, we can borrow against it.
Yep.
But this is a specific purpose loan.
It's
The bridge
simple,
loan.
it's easy, and it's your money.
Yeah.
It's not paying you while it's sitting in your house.
Right.
So let's put it to use to buy that new home. Then when you don't have to take money out of your investment accounts, you have
Yeah.
to cash out stock.
Yeah.
The money's there. Let's use it.
Yeah, great. I love it.
Yeah.
We need to do more of these.
I think it's a great option for down here.
Yeah, I agree. Thanks.